Hello friends, we're taking a look at TCG tickers. These are videos that members of the very cool Chartguys community have requested we take a look at. So we share them with you guys on YouTube because we want to share charts, we want to spread technical analysis and the love of charts because we're all obsessed with charts. And if you like charts as much as we do, you belong with us. So if you're watching this video, chances are you should be in Chartguys. OSTK is the first chart we're going to take a look at. Oh yeah, before I do, if this video is helpful, please consider liking, subscribing. It appeases the great YouTube algorithm, which in turn helps us, and it inspires us to do more videos. OSTK, daily time frame, big drop down, declining volume, fits the bill for pattern development, but it's too extended to be a flag. I don't like how extended some flags can get. Now, if we were drawing this and it was like this, and we had a terminus and a phase 3, beautiful flag, but we've just lingered here. So what I'm going to do is look at the 4-hour time frame and try to draw a channel because I want to figure out why this is patterning the way it is. To do that, I'm going to go draw on the top of my green candlesticks and I'm going to try and draw on some of my red closes. Let's grab that, get that thing out of there, and try to make this work. All right, so we got this close, this one, and you know what? It fits the bill for most of the content, but we close below this. We can't ignore the fact that we just closed below a support because it means one of two things. One, we're wrong about our pattern, which is possible. Two, it means that the pattern is an execution. We would have expected more volume and not much of a bounce. So what we're also going to do is drag this resistance line down here, encompass most of our information. Now, if we do see a uninspired low volume drop, we are simply just going to look for support in the area of 64 on the 4-hour time frame. If we see considerable volume come in tomorrow and we see a nice pronounced drop, then we are going to call this a nice break of this trend line. It will be reinforced. We will be late to the party, but nonetheless, it will be there. And we will look for an aggressive move to the downside. Look, we can find a nice bottom fish opportunity against this area of 64 support. But overall, that would just be heading toward a channel break if we don't get a solid bounce off of that level. Short-term time frame on OSTK. Let's see if we fit the bill here. Hourly downtrend. We've lost hourly support. So here's that little move. Almost coming back up. Very, very possible we're backtesting this former support as resistance. But you know what? I'm not too sold on that one yet. I think I need to see a more pronounced drop and backtest. Anyway, hourly bear is in control. 4-hour time frame, really anyone's guess. And on the daily, we just see this continued tightening range. We want to get outside of this channel. So, bottom fish opportunity against 64 support. Let's see if volume comes in and clarifies our diagonal pattern a little bit more effectively. NBDA, weekly time frame. This is a nice little bit of a bull flag type consolidation. We see our run up. Whoa, we see our run up, and then we see that contained action. Words are hard sometimes, especially after hours of videos. Here we go. We're looking for upside potential. Continuation. Weekly time frame is looking very good. Midweek, we have resistance way at the top. We'll go in the daily time frame and draw what that looks like. But there it is, right there. 588.15 cents. A daily tightening range has gone for the bulls. We broke over our key resistance level even after yesterday's spike above, close below, which means we've got ourselves a nice hourly uptrend. And that is what we're going to be watching in the short term. So we'll keep a close eye on this, draw out our beautiful trend. I love doing this part. And then we go down to incorporate as much of the data as we can. And you know what? I'm more comfortable calling this my hourly uptrend. Whatever this was, probably part of sideways consolidation. So sideways action, new trend, hourly time frame. Let's look for continuation, higher lows, higher highs, lose that. Then we'll go back to the 4-hour time frame and we'll simply look to establish a 4-hour higher low inside that channel. On the daily, lose that key support through the if we lose trendline support, we will look for daily consolidation. Daily consolidation would take us all the way to the low of 510 for support and below that 480. BYND continues its saga. I don't like these two upper wicks. We'll see if that has any more of an impact on our analysis as we dig deeper into the different time frames. Let's go look for some resistance. Okay, so I'm grabbing the top of August 2019, August 29th, 2019. Wow, is it already a year? Goodness. Okay, so we've got a couple double tops to worry about. 172.29 172.18, 9-cent spread. Let's go right into today's 5-minute time frame. And when did that come into play? We got, what, a penny above it? 172.45. All right, more than a penny. But you get my point. Big cloud of resistance at this level. So now what we got to do is take a step back, look at our trends, see what's going on here, and what possible clues we might have. 4-hour time frame is doing just fine. We got a pretty extended trend. At this point, what I would want to see would be a pullback, establish another higher low inside this channel, and then just hunt for entry opportunities with the anticipation of a break of that key resistance up there. Here we can see they've got multiple areas of confirmation for support. That locks that in pretty well. And then I'm just going to go to the top of my greens, and there's my 4-hour channel. So what I would want to see would be a loss of 15-minute higher lows, come down, consolidate into a low against this trendline support, come back up, and at that point, probably get into a tightening range, or we just break. Either way, I want to see volume on that break. I want to see bulls over 172.45. I want to see that the channel is still in play, and then I want to hold that as resistance. Nice variety of opportunities coming up for your BYND, all about getting over that key hurdle. Tesla daily time frame tightening range, and this one was interesting because we were hunting for daily higher lows. So we have our equilibrium, and we're gonna just draw that in. Bear with me here. Looking for daily higher lows. Now this is not locked in yet. This is not a daily higher low, but this is what I'm waiting for. So when I was watching the 15-minute equilibrium today, I thought this was going to be it. Took my short opportunity, got it in a nice position, got stopped out break even. It happens. But I'm stalking the lower high under 461.94. It's not in play yet. We're waiting for it to develop. Let's take a look at why. So let's go into the 4-hour time frame. 4-hour higher lows, higher highs is starting to slow down a little bit. We know for a pattern continuation, we want to see a little bit of a loss of hourly higher lows and higher highs. That hasn't happened yet, but we saw some stagnation today. 50-minute time frame we'll get into. We'll be heading EQ. I thought we would break bear and set this off. Right now, hourly time frame is still for the bulls, and until we lose higher lows on the hourly, nothing is going to happen. 50-minute time frame is defended the 425.02 level pretty well. We're going to look for that to break. If that breaks, then we're going to be looking for hourly consolidation. Anything over 411.01 is still going to be an hourly higher low, and bulls will have complete control of that time frame. If we lose 411.01, then we look for 4-hour consolidation, and at that point, our EQ pattern should be well underway into its leg down, looking for a higher low over 351.30. So what are we going to look for in the daily time frame? Well, we can continue this hourly move, this 4-hour move. What we want to do is define a more concrete level of resistance that we can chip away at. Once we're in an EQ, we want to see a defined level like this 461.94. We don't want to run up really quickly on the daily time frame and then hit it, then pull back. That doesn't do a lot for us. That's why it's nice to see big bull moves that come up, get close to it, and then they get pulled back in a pretty big way. Somewhat similar to how we saw this push to the downside. We saw a lot of bearish momentum. We saw a nice bearish open. We pushed really hard as the bears could, and we springboarded in the wrong direction. Well, the right direction for the bulls. We want to see the same thing happen. We want to see extension. We want to see exhaustion. We want to see reversal. We don't know when that's going to happen, but I believe that if we look to our hourly time frame and loss of 425.02 and 411.01, that will be a good signal. I talked about the 15-minute equilibrium. Perhaps it was better on the 5. Yeah, it was this tightening range. And then we finally broke it. Stopped out break even. Kind of disappointing. Beautiful equilibrium. Beautiful trade setup, but that is just the way it goes sometimes. Anywho, that is it for today. I hope you liked the video. Certainly love talking about this stuff if it's not obvious already. If you want to be part of something amazing, check out chartguys.com. It is the greatest group of people that I've ever had the pleasure of interacting with. And if you like charts and you just want to be surrounded by positive people who love to teach and learn and be amazing, that's my pitch.